The market is in a tough spot right now, and Pudgy Penguins, the Pengu token, isn't that different. The question is, does it make sense to buy this bottom now? Let's have a look at the on-chain data, the data most people aren't considering. Let's try to figure out who is buying and who is selling here. Pudgy Penguins is the second largest meme coin on the Solana chain. Number one is of course Trump with 1.4 billion market cap. Pengu is at 1.1 billion. Pudgy Penguins is not your typical meme coin. Most meme coins recently got launched via the Pump.fun ecosystem, and they've got a stable supply. Pudgy Penguins, however, increases in supply over time, which can be seen as good or bad. Bad, of course, is that this will add more sell pressure to the asset. The good thing is that there might be continued development and marketing efforts that other meme coins don't have. Now here's Pengu in US dollars. I don't like to look at charts like this because the US dollar chart is very much impacted by the overall macro environment, right? When Bitcoin is going up, when Solana is going up, then Pudgy Penguins is likely going up as well. When they're crashing, Pengu tends to follow as well. So really, it's better to look at relative performance. This is Pudgy Penguins relative to the others market cap. How is Pengu doing compared to other altcoins? Unfortunately, since the end of July, we are in a constant downward trend. We are at the lower end of that trend, so there is the potential for a short-term rally of 25% outperformance versus the rest of the crypto space. But in general, the current momentum isn't that great. Here's Pudgy Penguins relative to Solana. There seems to be an invisible glass ceiling. This is where the negative momentum started, and we aren't yet at the absolute bottom in the Solana valuation, which is different to the comparison to all of crypto, to the entire altcoin market. Now we are comparing the performance of Pudgy Penguins to Solana because Pengu is on the Solana chain, and a lot of the liquidity is directly tied to Solana. So when Solana goes down by 10% in price, then automatically Pudgy Penguins also goes down by 10%. Now on chain, we've got 542,000 holders. Let's have a look at what happened to those holders in the last month, where Pengu went down by 33%. What we're seeing over here is the number of first-time versus recurring traders on the left. What we see on the right is the number of token transactions. It's hovering at a relatively steady level, potentially with somewhat negative momentum in the last 2 to 3 weeks. How do the statistics look like over the very long term? Here we've got the trading volume on chain. There was a lot of trading volume at the very beginning, which also tended to go up slightly with the secondary rally, but it never hit the initial levels. And that's because some of the trading moved to the perpetual futures. More on that in a second. It seems like outside of the rallies, it's mainly the small retail investor that makes up the trading volume. The whales and large retail isn't that active anymore, especially recently. I am always interested what are the retail investors doing versus what are the whale investors doing. And that's what those charts here show. On the left side, we see the number of wallets that hold at least 50,000 Pengu tokens. So at the current price, that's roughly $1,000 worth of the token. In the middle, it's 500,000 tokens or $10,000. On the right, it's $100,000. We do not see how the number of investors is going up for any of those wallet cohorts. And those are very long-term charts, right? They start in 2024. What's interesting is that we saw this massive rally in June and July, but the number of holders didn't really go up during that time. So what happened? I think it's now the bets on the price that move Pudgy Penguins. It's not anymore the trading that happens directly on chain. Check this out. In the last 24 hours, we saw 48 million worth of trading volume on Binance. Compare this with the perpetual futures market. Here we're at 240 million. So there's much more trading happening in the derivatives market, in the levered bets on the price. There's much less trading happening directly on the spot market. So the spot market isn't moving the price anymore as much as it used to. And that's why we don't see the number of holders going up during the July rally. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. Here is the funding rate of Pudgy Penguins over the long term. After the flash crash on the 10th of October, we haven't really seen that recover anymore. So there aren't that many more perpetual futures traders that are still optimistic about Pengu's long-term performance. Usually, for most crypto assets, we tend to see a positive funding rate. So the longs have to pay the shorts. The vast majority of perp traders are betting on rising prices most of the time. That's not anymore true for Pudgy Penguins since the 10th of October. On the 10th of October, we saw 51 million worth of liquidations on Pengu, and the open interest moved from 340 million down to only 100 million, and it has not recovered since. The trading volume on Pudgy Penguins on the derivatives market is also not recovering. So it seems like the market is moving away from the asset. Yes, it does make sense to buy when there is very little attention. It does make sense to sell when there is more attention. And currently the attention isn't as high as it used to be. So obviously today is a better time to buy compared to the peak of the middle of July. But I don't like this long-term trend of Pengu relative to Solana. This is really a contrarian bet. And it's not a bet we can hold for the long term because of the tokenomics. We see official unlocks starting in December of this year, so only in 1 month. Maybe the market makers will try to push up the price to get a better deal on the unlocks. But for the very long term, I'm definitely still bearish on Pengu. Very few people actually thought that we are going to see a turnaround at that level. Feel free to check out the videos on this channel around July and August of this year and look at the comments on those videos. Actually, let's do this together. Pudgy Penguins crash soon. Too late to buy Pudgy Penguins. Why Pudgy Penguins will crash. The Pudgy Penguins collapse. You get the drill, right? I was very bearish on Pengu. And have a look at the comments. Pengu looks healthy. I don't think altcoins are going to crash. I bought the literal bottom on Pengu. This, in my opinion, is going to at least 10 cents. We are now at 1.8 cents, right? This was written when we were at around 4 cents. Let's look at another video here. A Bitcoin maxi speaking and shorting on all altcoins. Sad man, Pudgy Penguins is a total ecosystem in Web 2 and Web 3. Do your research, sir. And spot ETF is coming. That means institutional money inflow. Isn't it interesting how the supporters at the time thought that a meme coin like Pudgy Penguins is going to get bought by Wall Street? And so you get the drill, right? I'm not going to go through all comments, but that is why being a contrarian YouTuber isn't that easy, right? If you're just hyping up tokens, everybody will like your video, everybody will give a thumbs up. Most people are just looking for confirmation bias, but I try to be as objective as possible. And again, I am still not convinced that this is the best asset to buy right now. The current momentum is scary, the potential downside isn't that great either, and the token unlocks don't tell the most convincing story either. Now there's a very interesting misconception with altcoins. Have a look at this chart here. This shows total 3 ES divided by Bitcoin. Now what does this mean? Total 3 is the market cap of all cryptocurrencies that are not Bitcoin and Ethereum. ES means that we also exclude stablecoins. So this is all of the volatile altcoins that are not Bitcoin and Ethereum. And we look at that market cap relative to Bitcoin's market cap. So how are the volatile altcoins doing relative to Bitcoin? And it seems like this is trading in a range in the last 8 years. If we just look at the prior year, we also seem to just performed in the same way as Bitcoin. But clearly that is not true. Have a look at the performance of these smaller altcoins in the last year. Pretty much everything is red while Bitcoin went up. The key to the puzzle is to understand the difference between market cap and price. This here is an example of WorldCoin. WorldCoin over the years saw an increasing market cap. It went from a peak of 1.5 billion to 2.5 to more than 3 billion. So WorldCoin tended to grow in market cap. But have a look at the long-term price chart. It looks very different. WorldCoin's price peaked at close to $10 and is now below $1. There can be a massive disconnect. In this chart here, it just looks at the altcoin market cap relative to the Bitcoin market cap. And this is true for many altcoin related metrics. It's true for the others market cap. It's true for the others dominance. It's true for dominance charts in general. When we look at the Bitcoin dominance or the Ethereum dominance, we are just comparing market caps. We are not comparing prices. Even when the Bitcoin dominance stays stable, Bitcoin very likely has outperformed most altcoins because altcoins might have been stable in market cap, but they might have gone down in price. This effect that we see for WorldCoin is very typical for altcoins. Now here's the circulating supply of WorldCoin. Again, just an example of what's going on with the market. We had 500 million WorldCoin at launch, and that more than 8x'd over the span of 2 years. When we look at the entire altcoin market, at least the tokens that are tracked by Tokenomics.ai, we've got weekly unlocks of roughly $1 billion. So if the demand for the altcoin market is below $1 billion, if the altcoin market doesn't grow that much every single week, then the price goes down. Because all of those unlocks, they are tokens that get allocated to the early investors of the altcoin projects. They get allocated towards the founders. They get allocated towards the insiders. So they are cashing out at a rate of 1 billion per week. And if the retail investor doesn't buy at the same rate, then price goes down. So here is an example. This is WorldCoin in US dollars. Here is WorldCoin relative to Bitcoin. So much more consistent underperformance. Now there are two potential takeaways from this. The first one would be to just completely stay away from altcoins altogether. Altcoins are rigged, altcoins are through dump on retail investors. But the second potential takeaway is to maybe flip this thing around. So we are betting on falling prices of WorldCoin, while at the same time betting on rising prices of Bitcoin. So when we flip this chart, we get this here. This looks quite interesting, doesn't it? Since launch, Bitcoin outperformed WorldCoin by 836%. So that's the kind of performance we are looking for. The problem, of course, is volatility, especially here at the end. So WorldCoin occasionally does have positive news. It still has development. It's still an active project. And so a strategy like this can still lead to temporary drops of 55%. Despite the long-term outperformance. So the idea to bet on token inflation structurally is a good one. The idea to bet on falling prices when things look like this is a good idea. But risk management is crucial, and we have to look at assets that don't have that much more active development, where we don't see any positive news around the project anymore. Here's an example I like to give regularly on this channel. This is Bitcoin relative to Balancer. Balancer also has a high token inflation. And yes, there can be some drawdowns along the way as well, but they're not 50%, they're only 30%. And on a logarithmic chart, this looks much more manageable. And so this strategy doesn't just work in theory, it actually does work in practice. Let me show you how. When we look at this relative valuation chart of Bitcoin to Balancer, and we compare this to just buying and holding Bitcoin, so that's now the line in orange, we can clearly see how betting on the differential, so betting on falling Balancer prices by betting on rising Bitcoin prices, has a way better long-term risk-adjusted return. And so I followed this strategy for the last 4 years. This is a monthly chart. Had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices at the same time, I got the performance here in black. Now the problem is, just because I make profit with that strategy doesn't necessarily mean that you have to make profit with that strategy. But I do believe in the strategy that anybody can mirror similar performance. What we've got over here is a copy trading vault. So the premium members of this channel had the possibility to invest in a capital pool. That capital pool is closed until the end of the year. But anybody that deposited in July of this year is now up roughly 20%, while Bitcoin since then went down in price. Of course, the massive market disruption that we saw recently helped us as well. It was actually the best weekly return ever. It brought us more than 9%. Most others got wrecked, but we made money. And so I made several videos on the topic. There's one video explaining the copy trading vault, but again, that vault is closed until the beginning of the year. But here are the two more important videos: using perpetual futures to bet on relative valuations, and risk management with relative valuation bets. Risk management is extremely important, because if you don't know how to do that, you get wrecked during volatile times. You don't make money. So here are the two videos. This is 34 minutes in length. Here's the other video, 28 minutes in length. And once you've watched those two videos and you've joined the premium groups, I will share my favorite trade with you. So the favorite trade will look very similar to the Balancer trade that we looked at. If you are not making money with that favorite trade after holding it for 1 month, I will refund the premium membership fee to you. So really, you are not risking those 125 US dollars. If you're not making money with the trade, you just get this refunded. I will not ask any questions. If you want to be part of the next copy trading vault and you don't want to make the trades yourselves, you simply just want to deploy capital, then feel free to check out this video over here. This was the introduction to the vault from July. And feel free to consider to sign up for the annual membership, because the yearly subscribers, they get access to that copy trading vault that currently is closed. Of course, you can simply start out with monthly, start the trading yourself, and then swap to the annual membership later on. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. So next time on YouTube, or see you in premium. Cheers.